Hello, everyone. My name is Stefano Marani. I am the Chief Executive Officer of Renergen Limited, a dual-listed company on both the JSE as well as the ASX. Following on from some recent press, including a documentary on Carte Blanche this last Sunday, along with our recent announcement to commence drilling of the inclined well, there have been some requests to put out a little bit of a podcast for people. So this is it. Thank you very much for watching. It shouldn't be too long. It's accompanied with a presentation, so I'm not going to go through the presentation in too much detail. I'm rather just going to focus on the highlights. Feel free to read the presentation in your own time. What I'm going to do now is I'm going to share the screen so that we can see the presentation. There we go. All right. So I'm going to skip through most of this. This is all relatively self-explanatory. We're dual listed. We've got about 117.5 million shares in issue across both exchanges, which puts our market cap somewhere in the region of about 150 million Australian dollars, or about 1.75 billion rand. The shareholding is broken up. The Otto family, you can see there in the pie chart, were the original family that backed Nick Mitchell and myself in the acquisition of the business. Hence, they still are a fairly significant shareholder. Other notable shareholders in South Africa include the fund Mazi Capital, who have about, call it 45 to 50 billion rand of assets under management, which is about 4 billion Australian dollars. They hold a position of about 20%. And they are represented between two buckets over there, the government-related entities and financial institutions. Aside from that, Nick Mitchell and myself collectively, we hold about 15.6% of the company, and then the balance is held up by private investors and then a strategic investor in on the Australian Stock Exchange, notable Pioneer. In terms of the board, notably, obviously there's myself and Nick and Fulu, our CFO, we're the three executives, but we've also got Brett Kimber as our chairman. He's an ex-director of the Lindy Group, and he ran the Eastern time zone out of South Korea for Lindy at some stage. And then in addition to that, more familiar to the Australian investors, we've got David King. Dr. David King is well known for his involvement in companies such as Sapex, Eastern Star, Beach Petroleum, Claremont Petroleum, as well as several others. So he brings a wealth of knowledge on the exploration side to the team. All right, so in terms of what we have and what makes this project so unique, the big difference between this play and any other oil and gas play is the fact that it doesn't contain a traditional reservoir. So there's no sandstone, there's no shale, there's no porous rock throughout the majority of the field that contains the gas. The gas comes up through faults and fissures. So the gas originates from much deeper down. Now, where this becomes truly unique is the fact that the gas has been discovered to be renewable. And the fact that the gas is renewable comes from the fact that the methane is emanating from bacteria being produced deep down. So bacteria are eating carbonaceous rock and the bacteria excreting methane. That methane then permeates up to the surface via faults and fissures. How did it get there? And how it got there is also instrumental into why we have the kind of helium that we do. So around 2 billion years ago, the Earth was struck by an enormous asteroid. It left the largest crater known to mankind on the planet. So it was a pretty big rock. It left an enormous crater. This crater eventually filled up with organics, mainly algae, and that then fossilized, and that formed the carbonaceous rock that the bacteria are eating off of today. But more importantly, what this crater did was that it created a structure on the surface, very much like a fruit bowl. And what that did was that all of the heavy metals that had been deposited there in the years preceding remained in place, whereas throughout the rest of the world, basically soil erosion meant that all of the heavy metals that were deposited on the surface of the Earth just basically got washed to the sea. The result is that this area contains a particularly high concentration of heavy metals, higher than most other places in the world. Point in case, this area produced 40% of the entire planet's gold in the history of the world. It still has most of the world's gold reserves. So this asteroid was responsible for an enormous change to the environment and mineralogy in the area. How does this help us? Well, we're not after the gold. What ended up happening was that the uranium and thorium that was on the surface ended up being trapped in a layer called the Dominion group under the force of this impact. And where most other places in the world you've got uranium at 3 to 5 grams per ton, what you see in the Dominion group around our field is concentrations of uranium and thorium of up to, in some places, as much as 10 kilograms per ton, which is an inordinately high concentration of uranium and thorium. This is important because uranium and thorium undergo radioactive breakdown. So we all know that these are radioactive metals, but what happens is that uranium follows a path. It goes from being uranium-238 all the way down to eventually becoming lead. And along the way, it releases a number of helium molecules. And that's important because this uranium has been in place for between 2 and 3 billion years in this area. It's got an incredibly high concentration. And we've got an area spanning 187,000 hectares in the Free State, covering this area where we've got this incredibly high concentration of uranium and thorium, basically an unprecedented concentration of uranium and thorium. Now, the metals are far too deep to make them commercially viable to mine, but we don't need to mine them. Essentially, as I mentioned before, the methane's coming up from much deeper down. The methane then permeates through the Dominion group. It collects the helium along the way, and then all of it congregates in a layer called the Wits. And the Wits, within this area, you will find very high concentrations of both helium and methane. But this is in essence why we've got the kind of concentrations that we do. So to put this in context, the average concentration being recovered in Qatar in their gas is about 0.01%, between 0.01 and 0.05%. The best concentration for any country is the United States. Across the entire continent, they have around 0.35% average concentration. Our worst well is 2%. The last well was 12%, which means that in order for us to extract helium and sell helium, we don't need to sell that much LNG. Whereas for anyone else trying to sell helium, they have to sell an inordinate amount of LNG in order to recover a little bit of helium. And then the little bit of helium on the side doesn't become a very important feature in their income statement. Whereas for us, given the high concentration, it becomes a very, very important feature of our business. All right, so why is helium important? Obviously, MRI is one of the critical factors. You use it not only to run the MRI, you use the properties of the fact that helium cools down, it liquefies at minus 269 Celsius. So it's pretty chilly. You use that to run the magnets, you supercool the magnets in the MRI, but you also need the liquid helium in order to manufacture the MRI. And so there's a huge amount of it that goes into that. Obviously now with COVID, there's a lot more use in the medical industry because it's mixed with oxygen to make a product called Heliox. And they're using that in the respirators to help particularly chronic COVID sufferers. So we're only seeing demand from the medical side increase with helium. Welding, very specialist welding. You can't really use any other gas as a substitute for it. Other is pretty cool. Other actually refers to rocket launchers and things of that nature. So you can't launch a rocket without helium. You need the helium to purge the fuel lines. So just to be clear, helium is not combustible. It's not hydrogen. Helium is inert, but it's the only thing that's still liquid when it comes into contact with the fuel tanks, which are filled with liquid oxygen and liquid hydrogen. And so you use them to clear off the ice on the rocket right before launch. So they use quite a bit. You use it in laboratory, and then more in touch with what we use it for on a daily basis. I wouldn't be able to record this podcast. You wouldn't have a laptop. You wouldn't have a cell phone. You wouldn't have a TV. In fact, you wouldn't have anything that has a microprocessor in it without helium, because you need it for the inert atmosphere, and it needs to be both chemically and electrically inert, which means that there is no substitute for helium. So really, it's pretty important in our everyday lives. Without it, the world would really suffer. Supply and demand. Now, this is a commodity that starts to become very interesting. Um, Historically, the world was supplied around, well, way back when, around 30% of the entire world supply of helium came from a thing called the BLM, the Bureau of Land Management. It's a strategic reserve in the United States, in Amarillo, in Texas. And essentially, from World War One, the American government started stockpiling helium in a sandstone deposit 2 kilometers underground. They built it up into quite a formidable reserve, and then eventually started auctioning it off to try and recover the investment made into the field in the first place. What ended up happening was in 2014, they decided to start shutting down the helium reserve, and quite quite importantly, in 2018, it was announced that the BLM had now run out of helium and they were going to cease auctions. This came shortly on the back of the American government declaring helium the second most critical element to US national security, which meant that in 2018, the auction saw prices of helium jump almost 135% from the previous year. And over the past 5 or 6 years, well, relative to 5 or 6 years before that, the prices have done over 450%. Now, this is for helium in raw form, still underground, yet to be extracted, yet to be purified, and yet to be liquefied. So helium prices have gone a little bit crazy. And the reason for that, you can see on this graph. The big issue with this is that you can see the BLM is the dark green line at the bottom, and its production has fallen off a cliff. Now, this chart was produced by Edison Research in 2017, prior to the announcement of the BLM. So this is a little bit out of date, but unfortunately, there isn't anything more recent in the public domain. So what's curious about this graph is that the 2019, 2020, 21 figures and thereon for the BLM are actually probably a lot higher than they're represented a lot higher in this chart than they would be in reality. What's also notable is that the Hugoton field, which is the medium green line just above it, the Hugoton field goes offline 2022, 2023, which means that that's going to put additional supply pressure on. Qatar is obviously a very large producer. That's the first of the gray lines. Qatar was meant to bring its new plant online in 2017, then it was delayed to 2018, then 2019. As it stands right now, we don't really know when the next Qatar project is going to come online. It may be 2020, it may be 2021, but at this stage, we just don't know. And there are some challenges with the construction going on over there, but that's all in the public domain, so I'm not teaching you anything new here. The other project is the Russian project, the Amur project. So it's anticipated that the Amur project is going to come online. People don't really know. It was meant to be 2020, 2021. That's been delayed. We're not entirely sure when it is going to come online. But as it stands right now, that project has also been delayed. So you've got all of these difficult constraints in terms of the actual supply of helium. On the demand side, it's one of these products that's very much like lithium. The more of it that you produce at the right price, the more of it the world will consume. So I wouldn't really call this a demand curve. I'd say that this is a consumption curve based on what's currently available in terms of supplies. The consumption over here doesn't factor in the fact that China has increased the number of rockets it's launching. Australia has announced its entry into the space race. Pakistan recently launched a rocket. India's been launching rockets. SpaceX is now online. They're launching rockets. So there are numerous additional new requirements for helium coming online, and none of that has been factored into this. You also have the medical device industry in China growing at 20% year on year. And one of the things that we think may be a trend following COVID is the fact that you will probably see a huge number of additional medical facilities being built in response to the world being prepared for the next pandemic. And if you're building a hospital, well, you may as well put an oncology unit in it, which means that you may as well just put an MRI in it. And that means that we see a significant increase in the number of MRIs being built and installed. So we can only see the demand side of helium increasing. This is what I mentioned before. This is the chart with the pricing. The orange pricing are the auction prices from the BLM, and this is referenced off the left-hand axis. So in other words, you could see that in 2017, the price was a little over $110 per 1,000 cubic feet. And then in 2018, it spiked to 286 US dollars per 1,000 cubic feet. The dark blue lines or bars represent what the equivalent liquid price. So in other words, it's now been brought up to the surface, it's been purified, it's been liquefied. Those were the average selling prices. 2018, because it was such a disjointed year in the middle of a massive crisis, it was very difficult to obtain any kind of accurate pricing on liquid, but suffice it to say it was significantly higher than it was in 2017. To give you an idea of what it was probably trading at, you can see the green line over there. The green line is referenced off the right-hand axis. That is anecdotal data that Edison managed to obtain from buyers of liquid helium, the end users, and what they were paying for liquid helium once it had gotten to them. And that's referenced off the right-hand axis. So you can see over there that in 2017, pre-crisis, it was being sold at around 800 US dollars per MCF. Obviously now it's, we've heard that it's been between 1,000 and 1,200 US dollars per MCF. Of course, we don't have any evidence to substantiate that, so that's purely anecdotal, but that just gives you a feeling for what the helium market looks like at the moment in crisis. Obviously, a large part of our business is the natural gas market, and where we differ substantially from most of the international markets is that South Africa is in the midst of an energy crisis. Obviously, the local power generation company, Eskom, is struggling with load shedding and with generation capacity. But then in addition to that, we also have significant barriers to being able to actually import any other form of energy. So most of our gas comes through a pipeline from Mozambique. It originates in the field called Temane. It comes all the way up to Joburg, and then Sasol sells it at standard pressure and at quite a significant premium to what the international market is paying. So we started a little pilot project. The use for our gas is we use it as a substitute for diesel in buses and trucks, and we reference it off a benchmark of diesel, which is incredibly expensive in South Africa, again, all part of the energy mix, with the result that we're capable of achieving prices on our gas of anywhere from around 14 to 18 US dollars per MMBTU, which is obviously a significant premium to what's being paid internationally. And as a result, we have a particularly profitable business on the natural gas side, in addition to the helium. There are four main pillars to the business. We're going to be looking at power generation now that we've made the larger new find. Industrial users, the intention over here is that we are looking to substitute LNG for industrial companies that are currently using LPG. LNG is not only cleaner, but it gives a much better gas. So in specialist operations like paint yards, LPG is not ideal because it leaves sooting, and you'd prefer a cleaner burning gas, which historically wasn't really available to many parts of South Africa because the pipeline only delivered gas in Joburg. And so this becomes an easy selling point for us. Liquid fuel substitution, obviously buses and trucks. What's key over here is that South Africa has around 377,000 registered large trucks on the road. It's probably within the top, I believe the figure is it's probably around the 11th largest fleet of trucks in the world, despite our economy only being 30th largest. And this is a function of the railway network not operating as efficiently as it could be, which means that we've got a particularly outsourced opportunity over here. Phase one of our project will see us supply a maximum amount of fuel for around 450 trucks. Now, you put that into context of 377,000 trucks on the road, it means that the demand always outstrips supply. So we're not particularly worried about placing LNG. And then the last pillar is obviously helium, which is a particularly attractive business for us. Phase one, we entered into construction of phase one. Phase one is the joining of the 12 wells that we have at the moment via pipeline. It's a low pressure HDPE pipeline buried 2 meters underground. And that pipeline will collect all of the gas to one centralized point, which will see us go into operation producing around 50 tons per day of LNG, which is not particularly large. It's considered micro scale, but this is a pilot project for us. In addition to that, we'll be producing around 350 kilograms of helium per day. The majority of that has been sold in a take-or-pay contract with Linde, which is one of the largest gases companies in the world, listed on the S&P. We'll just basically be ramping up our operations through building up filling stations across the country on the major highways. Here you can see some examples of buses and trucks, and this is the road network that we're targeting. So the first phase will only have sufficient fuel for us to be able to fuel on the N3, which joins Johannesburg, which is the main economic hub, and Durban, which is the major port. So we've seen data to indicate that there are probably about 11,000 trucks each day in each direction between Joburg and Durban alone. So we're going to be putting up filling stations in Johannesburg and filling stations in Durban, and we'll start up with supply of LNG on those two routes in the year of 2021. As we move into phase 2 and we've got sufficient capacity, we'll then look to put additional filling stations so that we can service the N1, the N5, the N6, and the N2 highways, which will basically be all of the intercity routes where LNG is ideal. So phase 2, we'd announced in December the strike of gas where we had 12% helium in the gas as opposed to the rest of the field, which is an average of 3.4. This was a very significant discovery because, as I'd mentioned earlier in this, we don't have a conventional reservoir. We've got faults and fissures. However, what we did discover is that you can see that yellow blob over there on the left-hand side. That yellow blob represents a sandstone trap. So now we actually do have a portion of the field which does have a reservoir in it and has been saturated with both helium and methane. More importantly, what we discovered in the well that we drilled, we decided to drill horizontally so that we could capture as much data as we could. And we discovered that there are 2 faults underneath the sandstone that have been feeding the sandstone with this gas. Faults 2089 and faults 2057. What was particularly interesting was that we discovered that the gas permeating up through the faults contains helium at a concentration of 12%. Previously, we had believed that the helium was dissociating from the methane and just basically the sandstone was a lens concentrating the helium because helium floats and helium is lighter than methane. So the methane was being trapped in the sandstone, pushing the methane down. But in reality, that turned out not to be the case. What's critical over here and where we see this as such an exciting opportunity is that the gas is coming up with a concentration of 12% already. And that is an enormous game changer for us. So we've drilled this well. In its peak of flow, it reached up to 850,000 standard cubic feet per day in initial testing. The well has subsequently filled up with water, so we're busy making plans to try and dewater it and manufacture a special pump. We're also going to try and seal in. We discovered that the water is coming in from the coal layer. So now we know in future how to drill these wells. We know where to target and we know where we need to case in to prevent water coming in. So this well, from an exploration perspective, has been an absolute raging success for us. In the interim, what we have been working on from a desktop perspective is that along with our geologists, we've discovered and we've mapped underground a 3-dimensional model of all of the faults and fissures. You can see that with these lines. So this is an aerial view. These faults and fissures are all of the faults and fissures in the area that we've already identified thus far, which are gas bearing. Now, the 2 notable ones over there, you can see the orange one in the middle is 2057, and then just to the left of it is BH2089. Those 2 faults between them span around 30 kilometers in length, and those 2 bear helium at 12%, whereas the rest bear helium somewhere between 2 and 4% in concentration. Now, don't get me wrong. I mean, 2% is still great. You compare that to the chart on the right-hand side, and you can see the concentrations in other countries, where the United States are the rock stars at 0.35%, and then you've got places like Argentina and Qatar, which are close to 0.05%. So, yeah, even 2% is nothing to be sneezed at, but 2057 and 2089 are particularly special. We've mapped out the total length of these faults, and we've now identified 900 kilometers of fault line across the field, which is gas bearing. which means that the plan now is to start drilling at 300-meter intervals and to intersect all of these faults in order to create a network to bring up gas for phase 2. The recent announcement is centered around the incline drilling. The chart on the left, you can see the black line is the planned well being drilled at a 45-degree angle to the vertical. And the two-dimensional planes over there are all of the gas-bearing faults. Now you can see that if you were drilling a vertical like HDR1 or MDR5, MDR4, MDR5, those were partially successful. You can still have gas and not hit the fault. If you're close to the fault, you'll get some communication. But if you hit the fault perfectly, then you get very strong gas flows in relation to the context of our field. Now, the beauty about the inclined well that we're drilling is that you don't only have the opportunity to hit one fault, you can hit multiple faults. This is an important well for us because this then proves the theory that we increase our probability of drilling, which is important for the reservoir engineers. But it also means that we have the potential to increase flow rate per well, which means less drilling to extract more gas, which means that we can size phase 2 at a much larger project. The intention for phase 2, in an ideal world, we would like to have phase 2 come online in 2023. Our target that we're looking for, obviously this is all subject to the geology proving that the gas is there, but the target for phase 2 is to ramp up helium production of between 5 all the way up to possibly 10 tons per day, which in the context of our first phase, which is only a paltry 350 kilograms a day, this would be a significant increase. Now, to put these volumes in context of global consumption, the world consumes about 80 tons per day. That's the entire global consumption of helium. So between 5 and 10 tons per day would make us a particularly significant player in the helium market. Some frequently asked questions that we normally get: why dual list? The JSE is a great exchange. It's very well regulated and it's a very large exchange, but it's particularly well suited for sectors such as financial services, FMCG, and for very, very well established mining companies. There aren't that many junior miners listed on the JSE, and in fact, when it comes to oil and gas, we're the only ones. So it means that the investor base on this side is a little bit less au fait with oil and gas as opposed to other exchanges. By contrast, the ASX is a very fertile home for junior miners, for oil and gas, and for small companies. And so it just made sense. That was a natural fit. Is the stock fungible between both exchanges? It absolutely is. An Australian that has a broker that can trade both the JSE and the ASX is capable of taking advantage of any arbitrage. The South African retail investors, unfortunately, cannot trade on the ASX due to exchange controls, but suffice it to say the stock is completely fungible on both exchanges. And probably one of the more important questions is, how has COVID impacted the business? So I'd be remiss to say that it hasn't impacted the business, but fortunately we have not been as hard hit as many other people. In terms of operations, we halted operations, and that was more out of a case of just safety for our employees. We do have the ability to resume, given that we're an essential service, and therefore we've currently started resupplying gas. Suffice it to say, this is only a supply of gas for a little pilot project, which is satisfying the needs for 10 buses. So it's not really going to move the needle from the company one way or the other. It was a proof of concept. But still, we're priding ourselves on the fact that we are capable of delivering gas in these times. Construction. In hindsight, the decision to order equipment out of China paid off because the impact of COVID in China was relatively minimal. We haven't been notified of any delays as yet in terms of our turn on in July 2021. However, we're cautioning people, things could always change. So we're building in our own timeline an expectation that will probably only come online in third quarter of 2021. But obviously at this stage we haven't been notified of any delays. But we'll keep the market informed as we go. On the pipeline has been halted in South Africa with the lockdown. Fortunately, the pipeline was due to be completed around 5 months prior to the equipment arriving, so this hasn't caused any delays to the overall project timeline. And now we're with the lockdown levels in South Africa changing, we're optimistic that we should be able to resume construction in the near future. We'll obviously keep everyone up to date. The one area that did get impacted by the COVID was exploration. Ideally, the inclined well would have been drilled long ago, and we would have already been working on the updated reserve statement. But obviously now we've announced that we're back in a position to commence drilling. So within 6 weeks, we'll have the rig mobilized and we'll start drilling, and it'll be 2 months from there. So the exploration stage has basically taken a knock in terms of its timing, but obviously management is heavily focused on trying to get it up and running again. From a balance sheet perspective, we're in a particularly strong position. We managed to raise all of the cash that we needed before the first incident of COVID-19 came up. We have already drawn the first tranche of the OPIC, and we're working on the second tranche of the OPIC loan, and that'll go towards the commencement of various elements of construction. That is us in a nutshell. I thank you for listening, and if you've got any questions, please don't hesitate to reach out, info@renergen.co.za. Alternatively, you can reach the website, and we're all accessible. So thank you very much, and wishing you all a great day further.